Wolfbrook, are they any good? Now, because here at Opus we work with over 58 developers right around the country, investors often ask, what do you think of? Insert developer name here. And one of the ones that you guys specifically wanted to hear about is Wolfbrook. So today you're going to get our honest review of them. But of course, New Zealand is a small place. Everyone knows everyone. So let's address any potential biases. Here's our history with Wolfbrook. We have recommended some of their properties as investments in the past, and as of recording, we still recommend some of their properties as investments today. Now, because of that, there is an incentive for me to tell you, you absolutely should buy a property from them, say they're the best thing since sliced bread, but I'm not going to do that. This is going to be an honest review based on the facts. So if you don't know who Wolfbrook are, who are they? As of today, they are the 9th busiest builder in New Zealand. 363 properties consented through council over the last 12 months. That puts them just ahead of Ockham and just behind Golden Homes. They tend to build townhouses. No apartments, no standalone houses here, and they're primarily building in Christchurch City. Over the last 12 months, when we look at those consents, over 2/3 of those were in Christchurch, followed by Lower Hutt, Wellington, and then a wee bit in Auckland, but the focus is really in Christchurch and also on 2-bedroom townhouses. In fact, 84% of the properties currently available on their stock list are 2-bedroom townhouses. So we know they're primarily building 2 beds in Christchurch. So now you know who they are and what they build. Let's go through whether you should buy an investment property from them and go through the pros and the cons. And you know what? Let's just go to one of their developments. So one of the things I quite like about Wolfbrook as a developer is they do tend to build their properties in the areas we like on this YouTube channel. So in Christchurch, I'm talking south of Hagley Park, round to the east of the city. These are the sorts of suburbs that historically have got above average capital growth and still get above average yields. And so we like those areas. Now the one we're going to today, Wolston, that is one of those suburbs that we like here. So I like that. Up in Auckland, they tend to be building in what we call our corridors of affordability. Again, reasonably good capital growth, above average yields. And so they tend to build in suburbs that we like, that have good investment fundamentals. So we're here at Mackworth Street in Wolston in Christchurch at this newly completed Wolfbrook development. And one thing I want to point out is take a look at this design. It doesn't look like every other single thing that Wolfbrook has ever built. And I think that's really important. Not all developers are like that. And I think that's important because when it comes to reselling the property, you don't want it to look like every other single property out there. So here are one of the units, and it's a pretty standard 2-bedroom townhouse layout. You've got the kitchen, you've got the dining/lounge, toilet downstairs, wee bit of a backyard there as well. Now I'll show you upstairs in a second, but what I really want to talk about are the numbers on this, because that's what matters if you're an investor. Now a number of our investors at Opus did purchase in this development. These 2-bed townhouses, around about 535k purchase price. Today, 14 months later, hey, they're probably worth between 600 and 620k. So those investors would have made somewhere between 65 grand, maybe up to 85 grand. That level of capital growth, not going to continue into the future at the same rate, but really good news for those investors who made the call to jump in. So upstairs, pretty standard layout. Got a bathroom straight through here, bedroom either side. But what I would say is pretty decent size here. Quite large wardrobe space and decent lighting as well. So pretty tiny development here. These are going to rent for about $440, $450 in today's market. So the investors who invested these, somewhere about a 4.4% yield based on what they paid. Now that we've looked at the pros, let's look at the flip side and talk about the cons. Number one, not every property they build is a good investment. So here's an example of a property I'd be quite comfortable recommending to an investor. 2-bed townhouse in Christchurch, pretty good purchase price. But here's something I wouldn't. Similar purchase price, similar product actually, 2-bed townhouse, but this one is in Lower Hutt. Now the reason I suggest that this perhaps would not be the right investment is right now the Lower Hutt property market is about 8% overvalued. Now that simply means that over the next 5 years, over the medium term, we wouldn't expect house prices in Lower Hutt to increase as quickly as everywhere else in the country. So buying a growth-focused investment like a townhouse in Lower Hutt is probably not the right fit right now. Similarly, here's another example of something that's probably not the right investment. 3-bedroom townhouse based in Christchurch, 920k purchase price. The reason I say that is for a similar amount of money, you could buy a 3-bedroom townhouse up in Auckland, and based on our forecast, we always use a high capital growth rate, so provides a higher ROI. Second con is they're primarily building one type of product, 2-bedroom townhouses, mainly in Christchurch. Now what that simply means is that if a 2-bedroom townhouse is not the right fit for your portfolio, then Wolfbrook is probably not the right developer for you. Now, for some investors, a 2-bed townhouse in Christchurch is absolutely the right investment, and Wolfbrook could be a really good option. But if it's not the right fit for you, they're probably the wrong developer. That does mean they're going to be the right fit for somebody who wants to grow their wealth over the long term, a growth investor, but they're not going to be the right fit for somebody who wants to earn a passive income today from their properties. And the third con is really around their pricing. I do want to talk about this. In the past, some of their properties have been on the more expensive side. Not all, but some. However, we do understand that they are currently reviewing their pricing, so this could change in the future. Now, ultimately, it's going to come down to the individual deal. So you do need to see how each property compares to similar ones available from other developers, but in the past, some of those properties have been on the more pricey side. Doesn't mean all are expensive, comes down to the individual deal. So let's talk about who they're the right fit for. Look, if a 2-bedroom townhouse in Christchurch is the right fit for your property portfolio, Wolfbrook can be a good option. They're not the only developer you're going to want to look at, but they can be a good one to consider. But if on the other hand, you are the sort of person who actually doesn't want to invest in Christchurch, you want to invest somewhere else in the country, or if you are the sort of investor who wants that passive income from that portfolio today, and you've already got lots of money to invest in property, then hey, Wolfbrook probably aren't building the sort of properties that you're going to want to invest in. Now, what I want to know is what other developers should we review on this channel? Let me know down in the comments section, and while you're down there, make sure you hit the like and subscribe button and toggle that little bell so you get notified about all our future videos.